We take back the banking functions in our life. So why would you ever put money in a traditional bank when you have a bank and you can put the money in your bank and make a better return, have the money be guaranteed, and have access to it the very next day? Changing one thing, and that's where your money went first, and then adding one step, the process. Nobody likes debt, right? None of you like debt. The fastest way to wealth is through your own debts and expenses. Their bank gets to use your $200 a month and send that money out to work for them, where your bank allows you to send that money back out to work for you. All right, happy holidays, Merry Christmas, and we have a New Year's coming. So this is the final week as we have New Year's Eve coming up really soon. So we figured what we would do in today's wealth webinar is do a recap of 2023, the highs, the lows, the I don't knows. We're going to just kind of do a brief covering of all the different things that we talked about, the things that we stressed, and we're going to measure some of the successes. We're going to not just measure successes that we had based on things we said, but we're also going to take account of your successes. You know, we hear it all the time in testimonials and Christmas cards, and thank you to everybody that sent us Christmas cards and goodies and fruits. As some of you saw, I was eating an apple. That was somebody sent us apples, which is fantastic. But want to give a lot of thanks to each of you, but I also want to know your successes. And when we get these testimonials showing the success people are having, I mean, it's literally life-changing. And, you know, from us to you, the reason we do this every week, the reason we do all these shows is, as most of you know, like, we don't charge for these shows. I don't have sponsors of this show. We don't have flashy advertisements coming up. Oh, hold on, let me pause so that we can show you our sponsor for the wealth webinar, or the sponsor for WTF, or Ask Me Anything, or Money Club Monday. I mean, there's so many shows that we do, and we do them all for free. We don't make any money from any of the shows outside of, you know, all of you. If we can solve your problem, then you end up asking us to help you. And that's the greatest honor, is, you know, the fact that we don't really have to sell anything. And a lot of people don't understand this in our circles. You know, they ask us, oh, what do you guys sell? Well, we really don't sell anything. We just solve people's problems. And because we solve people's problems, which we solve your problems, then our clients ask us to help them. So we're never asking you to buy, you're asking us to help solve your problem. And you know what? It goes to the 30-day challenge that many of you have been sending in DMs on the Infinite Banking group, the Facebook group. I appreciate that. You know, we did a 30-day challenge, which my team, we are on day number 13, and some of you are on day number, I think, 4 or day number 7, depending on when you heard about the 30-day challenge. But it's the strangest secret in the world. Every single day, we listen to a 31-minute video that Earl Nightingale did back in the 1950s. And those principles, those laws that he talks about, which are deemed the strangest secret in the world, are still true today. So it stood the test of time, but those laws are true because they've been always true. The greatest greatest minds, greatest thought leaders, greatest people on earth throughout time have applied these laws. It's throughout the Bible that these laws are talked about. And all we did is tapped into them and helped all of you tap into them. So with that being said, one of those laws, and you've heard me say this a lot of times, is giving. You know, I got some great advice from a mentor, Greg Reed, many moons ago. And it was during a really hard time in my life. And he said to me, he said, Chris, the best advice I can give you is give your best stuff away for free. I might have taken it a little bit far, but that's what we do. We give our best stuff away for free every single day. And we try to show up every single day, no matter whether we're traveling, no matter whether there's blizzards. We're here because we are here to solve your problems, because we understand the laws. Now, I'm not going to give you the strangest secret in the world. I'm not going to tell you what those laws are. You can watch Earl Nightingale's Strangest Secret in the World over and over and over again and learn what you have to do. But today, what we're going to do is we're going to go back to the beginning of 2023, and we're going to talk about the different lessons, the different things. We're not going to be able to cover them all because we go live every week. We're going to hit the highlighted ones. The messaging has not changed. And that's one thing that I think Stephen and I take a lot of pride in, is that our message that we've put out there has not changed. It has remained the same, probably well over a year, but we're just going to talk about 2023. Whether or not you apply what we teach, use what we teach, or use what we teach, that's up to you. But if you did, what we're going to do is today, we're going to kind of hit them and we're going to take a measure of, did it work? Was it helpful? And did we solve your problem? Because those are really the only things that matter. And of course, Mr. Lazy Cash is here. He never misses a good show. I've said this over and over again. So Stephen, where do you think we should start?
Well, that's a big question right there. It's been a heck of a year. Anybody, I know a lot of people on here, maybe I'm just curious. Let's do a quick poll. Like, if you've been kind of around our campfire, hopping on these webinars since before 2023, write old school in the comment box. If you're new in 2023, but you've been watching us for most of the year, write 2023. And if like you're brand new on here just in the last week or two, write 2024. So we'll see who's been around for a couple of years around this year, or who's new looking forward to 2024. Just curious. And so, you guys know that we talk a lot about how to control your money and then deploy that capital and continue to grow it. So, wow, big mixture, Chris, coming in. You see that?
I see that. It's crazy.
You guys know we present a lot of opportunities, a lot of strategies, things of that nature. So I figure maybe, Chris, we can just kind of do a basics of, what that kind of looks like with the money flowing, and then just talk about some of the different opportunities this year. But I'd like to hear from everybody on here, like, what opportunities have you been involved in? What have you implemented that we've taught you? Like, what are you doing now differently than from before you met us? Like, put that stuff in the chat box, and then we'll talk about it a little bit, Chris.
100%. Look at this. I mean, it's so cool to see, like, Deshauna, we got Greg, we got Smack, we got Isabel, Kimi. I might butcher the names. I'm sorry. I'm trying. Robin, Sean, Tammy. God, I need to put my glasses on. That's the terrible thing when you get older. I'm missing some of them. We got another Greg, Hallie, Carlos. Awesome. So we got a lot of new folks, and I love that because, if this is your first time, what you're going to do is kind of get a quick recap of the entire year. And, before I get into that diagram, one of the most important things I think that we started the year with, I went back in some of the archives of things that we taught this year. And one of the first things we talked about early in 2023 was budgeting. I know it's so boring, isn't it? Putting all your incomes and all your expenses and debts on a T-chart, like that's a bare bone basic. And I'm not going to teach you how to do that today. But once you create your budget, you've now understood what money comes in and what money goes out in your household. So after we understand our budget, we have to apply one of the age-old laws for becoming wealthy. And one of those laws is save 10% of what you earn. It comes from the richest man in Babylon. I mean, it goes back all the way back. You can trace the 10% rule all the way back. I mean, you've heard about it. But if your budget is complete and you cannot save 10%, we still have ways to help you get to the point where you can save it. But listen, write this down, folks. And I want to see a couple of you type it in the chat. This is very important. The fastest way to wealth, okay? Write that down. The fastest way to wealth is through your own debts and expenses. Remember, I just a second ago said, create your T-chart, which is your budget. And your budget's going to have income, all income sources on the left. And then down at the bottom, you'll have your total. So that's your total money coming in. And you can do net or gross. It doesn't really matter. I always prefer net, okay? How much do you take home? But if you're just looking at a checking account or a bank account, it'll show that. Over here, your expenses every week and every month, you have expenses. What are they? And underneath your expenses, you write down all your debts. So if we really just focus in on the debts portion, it looks like this. Most people have a car loan, okay? Now let's just call that car loan $500 a month. I'm just going to make numbers up. Then you have other debts, which would be credit cards, okay? So you write down all your credit cards. One is 20%, and that's $200 a month. Another one's 10%, and that's $100 a month. One is 29%, and that's $300 a month. Okay, then you got your college expenses, right? Maybe you got student loans. You write that down. Maybe that's $800 a month. It's different for everyone. 6%. You got a boat loan, which you got during the low interest rates, 3%, $1,000 a month. That's a really small boat. But vacations, maybe you save for vacations, HELOCs. But you write all these down, which they would all show up over here on your budget, right? So everything here is in your budget. Now, here's what I want you to imagine. Exactly what I just said. The fastest way to build wealth is through your debts and expenses you already have. So what do I mean by that? Well, car loan is $500 a month. That $500 leaves your family every month, goes to somebody else's bank. Okay, your credit cards, 20%, 10%, 29%, do yours. I don't know your numbers, but let's just assume that's what they are. $200, $300, $600 a month. Okay, in this scenario, that's leaving your family forever. $800 a month is leaving your family forever. $1,000 a month. You plug your numbers in for your debts. And then what I want you to envision, and I want you to think this is your worthy ideal. Let's just say for 2024, your goal is I want to be wealthy. Once you say that, you got to put a defined amount to that. You can never just tell the universe that I want to be wealthy. It's not defined enough. You could say, I want to be wealthy. I want $50,000 a month. How many of you on here want to earn $50,000 a month? How many of you want to earn, just write 50. Just write 50 in the chat. Let's just see how many of you want 50,000 a month. How many of you think that that's impossible? Does anyone think that's impossible because of circumstances in your life? Okay, so hold on. Who just said that? I got to go back up. Virginia, I want you to tell me, why is that impossible? Okay, why is that impossible? Got a couple other people. Robert, I want to know, why is that impossible? So just, all right, everybody hold off. Everybody that wrote 50K. There's 2 people that said it's impossible. I'm just curious. I'm 70 and you have no time. Okay, so time's against you. What else? And then I think there was one other person. Not possible for me right now. Okay. But what, like, whoa, sorry. Cash is laying on the board. Here's the thing. If you think it's impossible, then it is. Think as if you think 50,000 a month is impossible, forget about the circumstances, forget about what's going on in your life. Everybody's got their own circumstances. Everybody's got their own problems. Everybody's got something going on. But once you think it's impossible, that is the only thing that the universe can make happen. See, thoughts are things, and when you put an idea in your head, a dream in your head, if that's what you think about every single day, that's the only thing that can happen. So if $50,000 a month is what you put in your mind, and you thought about it every day, and you wrote that down every single day, then that is possible. Matter of fact, if you never ever thought of anything other than that, that's the only thing that could happen. And regardless of your age being 70, listen, at 70 years old in today's world, you're pretty freaking young. 70 years old, you're going to probably live till 90s, I would guess. I mean, things can happen, but that's a long time. That's 20 years. Do you realize people become multi-millionaires in 5 years? Do you realize most people can do it in 10 years? So Virginia, you're 70. You're just getting warmed up, sweetie. Like, it's time to get going. It's time to get that idea in your mind that you can do it. And other people say, oh, I wasn't born in money. Nor was I. Listen, here's the idea. The idea is 50,000 a month is in your head, and that's what you're going to accomplish. So what's the fastest way to start that? Well, look at your debts. So we always teach this, right? Everybody has money and it goes somewhere. Some people, their money goes to someone else's bank, all of it. Some people literally live paycheck to paycheck, and they live paycheck to paycheck because of the car loan, the debts, the college loans, the boats, the vacations, the just whatever they are. Your circumstances might be different than my board, but this is why people live paycheck to paycheck. So if somebody's paycheck to paycheck, the first thing we always teach, unfortunately, is the hard thing. You got to get a second job. You got to get a hobby. You got to get something going on in your life to make more money. Because if you're paycheck to paycheck, the only thing you can do is more. Okay, that's it. There is no other way. Don't let any quick talking person tell you, oh, you can do this, oh, you can do that. If you're paycheck to paycheck, you got to work more. That's it. And I hate to say that. But for most people that aren't paycheck to paycheck, they're saving money. The question always comes, where is your savings going? And a lot of people are like, duh, you just said it. It's going in a savings account. Some of you are going into money markets. The smart ones are putting it in T-bills and treasury bonds. So I'll put T-bills, treasury bonds. We're going to hit that today. Okay. And then some of you are putting it in stocks. Okay. I'm just going to put a unhappy face because you want to be very scared, but your money's going somewhere. Your 401k, 457, 403, your money's going somewhere. All we got to do is we got to build wealth. And that means we got to take back the money we're giving away. And that has to be broken down into bite-sized pieces. And I always say, take the smallest ones first. That's easiest. Let's say you got a credit card that's only $1,000 or a store card. Okay. And then you've got whatever, something else on here, a home equity line that's only 5,000. Okay. So start with the small ones. What we're going to do is we're going to change where your savings goes first. So whatever money you save, we're just going to reposition it. We're going to put it in a better place, a smarter place, a safer place. So that place, we're going to, for today's little thing, call that privatized banking. We're going to put it in your own private bank. It doesn't say Bank of America on the top. Your statement doesn't come in and it says Citizens Bank or something else. It's your private bank. Think as if you are the bank. So we save up $1,000 in your private bank. We hit our mark. We got $1,000. We're going to take that $1,000 out. We're going to put it over here. We're going to pay off that first credit card. Now, once that credit card is paid off, you no longer owe their bank that money. But remember, when you took the money from your private bank, you got to think like a bank, which means you got to think of it as I took a loan from my private bank. So that $1,000, that wasn't a withdrawal from your bank. It was a loan from your private bank. So you loaned $1,000 to yourself to pay off this credit card. That credit card was 20% interest, and you paid $100 a month to that credit card. So now what you're going to do is you're going to take that same $100 a month that you used to pay to that credit card company, and you're going to pay it back to your bank. Okay, so now how much money are you saving? Well, whatever it was before, you just added $100 to it. And you didn't have to work harder for that $100, did you? That was money you were giving away. So now you save up $5,000. Okay, so let's just up this up. You save up $5,000, but that $5,000 was easier to save because you had a tailwind of $100 extra a month, or the equivalent of 20%, the amount you used to give the credit card. So now we saved up $5,000. We're going to do that again. We're going to take another loan. So loan number 2 is going to come from your private bank, and we're going to pay off this loan. Now let's say that $5,000 loan was $200 a month, and it was 10% interest. So we're going to take that. So first loan was $100 a month. Now we're going to add $200 to that same thing, and we're going to put that over here. So now you got an extra $300 a month going into your private bank. That is not money you had to work harder for. You didn't have to work longer for that money, and you didn't have to take any risk. It's money you used to give away to someone else's bank. You keep doing this over and over again. At first, it goes very slow. It seems like it's never going to work. It's never going to work. It's never going to pay everything off. But then it goes faster and faster. It's called velocity. As $100 goes in, $200 extra goes in on top of these savings that you're already putting in, because up here you got your, sorry, it's a bad thing, but up here you got your W-2 income and the amount you save. So let's just say your savings started at $500 a month. Now you just added 100 and 200, and you just keep going. And eventually you pay them all off. You pay the car off, and that 500 is going down here. So now you got 5, 6, 7, 800 going in. You pay off all the credit cards. So instead of 100, it's 600. So now you got 11, 12, 1300 going in and straight down. So now all of a sudden you just created a $1,300 a month tailwind. Now it might have taken you a year, 2 years, 3 years, 4 years, 5 years. Doesn't matter how long it takes. Okay, even for Virginia at 70 years old, doesn't matter how long it takes. This is where you start building wealth. And you should never, ever take any risk with your money until these debts are paid off. The only debt I would say that you probably don't have to so much worry about today is your mortgage, your primary residence, because that's usually a bigger number, and we got better places that money can go to work. But this is always how it starts, folks. Fundamentals. Build wealth through your debts and expenses. So that is one of the first fundamental lessons that we always teach. And we teach this over and over and over again. Now, real quick, just going over here to everybody on this, how many of you have paid off all your debts using this method, or started to pay off most of your debts using this method? Put I in the chat. So Terry has, And I remember working with Terry on that. Robert, he consolidated his debts. Bob, Christine, Chris, Anna. But before, well, there was an I, but before. Okay, Ken's starting it. Perfect. So now what we're doing is as people chime in and put that in the chat, they're taking accountability. And everybody else that is kind of just starting the process, like, can't wait to start, from Frank, and started BYOB from Anna, that gives them hope because they see other people do it. Forget about me. I'm just the talking head. Forget about Stephen. We're just talking heads here. But we're just showing you the path, and other people are going to show you that it is possible. So when you say you can't earn $50,000 a month, start with, here, I'm going to go back, that T chart, add up all the debt payments that you make, okay? What was the sum total? I bet you most people, if you add up all the debts, car payments, college loan payments, credit card payments, home equity line payments, all your debts, include your mortgage in there. I'll bet you most of you are north of $5,000 a month. So now all we need to do is add an extra 45,000, okay? Which you're like, oh, Chris, that's a long way away. Yeah, but you would have never got there if you didn't free up this 5,000, because now you got $5,000 a month. And that $5,000 extra a month, and I'm just making numbers up, is money that you used to give away to somebody else's bank. You no longer give that away. You now created $5,000 a month that is now going into your private bank. Think about that. That's $60,000 a year, okay? That adds up super quick. That starts getting you places really fast. You need $50,000 a month. So now we just got to find, where does that $50,000 extra every single month, or sorry, $60,000 every year, where does that all go? Well, we start looking at other options. Stephen, where should we go after that? Now, remember, we covered budget, the 10% rule. Now we got to hit mindset. And I've already hit that once, but if you think you can't do this, then you can't. I can't change your mindset, but I can tell you that if you think and you set a worthy idea in your mind, I promise you, you absolutely can succeed at doing this. This is another thing too that we got to look at, and this is really going into positioning. Okay, so when we're looking at where all of our money is going to go after all the, sorry, I got a little note down here, after all the debts are paid off, we got to start figuring out, all right, how much money is going to gold and stocks and treasury bonds and alternative investments and real estate. So we got to start positioning. Positioning should come under things like, how much money do you want guaranteed? How much liquidity do you want of your money? How much diversity do you want in your money? What is your risk versus reward? How much risk are you willing to take for a desired return? And then, do you want your money safe and secure? We always talk about BYOB, be your own bank. Why? I didn't write the book, okay? It's R. Nelson Nash pioneered the book called The Infinite Banking Concept, which is the same as BYOB, okay? Identical thing. In the chat, what I want the first person to do, and I'm going to give you a t-shirt, okay? I'll mail it to you today. I want someone to give me the exact definition of what the infinite banking concepts is. Go. What is the infinite banking concepts? What is that process? Using whole life for a bank? Nope, Ted, that is not it. There we go. Robin, taking back the banking functions in your life. That is exactly what it is. So Robin, Stephen, if you could just watch the chat. Robin, can you give us your address and your shirt size? And I'll have Brandon put something in the mail for you today. So you notice how, and Ted, I'm not picking on you, bud, like most people think this way, including ChatGPT. I did a YouTube video where I debated ChatGPT about the infinite banking concept. And the infinite banking concept, according to ChatGPT, was very similar to what Ted said. Said it was using whole life insurance as a bank. But the true definition of the infinite banking concepts is you taking back the banking functions in your life, which that process, that concept has nothing to do with a whole life product, okay? So taking back the banking functions looks exactly like this. It's the circle that I drew a second ago, okay? All it is, it's you changing where your money goes first, and that is the specially designed whole life policy. So the reason we use a whole life is, well, because that's where the wealthy keep their money. That's what the Rockefellers and the Rothschilds and the Morgans and the Stanleys and Ray Kroc and Walt Disney, and you've heard me say it a million times, that's where they keep their money. That's how they started Walt Disney. It's how they started the real estate division of McDonald's. It's just that's where it's always gone. And there's a lot of reasons, which I'm not going to get too deep into, but we put the money into the whole life policy, specially designed and engineered whole life for that matter. We then make that money go to work. I showed you paying off debts. And then we recycle and recapture the money that we used to give away. Hence, we take back the banking functions in our life. But while we talk about taking back the banking functions in our life, one of the other things that we covered a lot this year is not just the concept, but we also covered, what does banking look like? This is a repeat for a lot of you. How do banks make money? Well, you deposit money in the bank, okay? We'll just pretend this is somebody else's bank. They pay you an interest rate. We'll call that 4%. They then loan that money back out at a higher rate. And what do they make when they do that? They pay you 4%. They charge somebody 7, 8, 9, 12%. What do they make in the middle? Who can tell me? That's right, spread. They make a spread. So if you're going to take back the banking functions in your life, don't you have to find a way to do what a bank does and make a spread? Absolutely. So that's how banks make money. They pay somebody 4 and they charge somebody 7. Now, just remember that. I'm going fast because remember, this is just a recap, folks. We're just getting crazy here, as Bob Ross would say. Let's get crazy. Here's that same diagram. Now, if you wanted to make a spread, what would you have to do? Well, first, you'd have to find a place to put your money, right? You got to earn interest because right now you put your money in the traditional bank and they pay you interest. So you're making interest and you feel good about that. And that interest right now is probably, I don't know, what's everybody earning in the bank account? And just so most of you know, that rate's going to go down soon. How much are you making in the bank? 5? Let's just use Anna's, 5%. Okay, we're going to make 5%. In a traditional bank, you can make 5%. But Anna, what happens when the Fed drops rates in 2024, like Jerome Powell opened the door? Will you still make 5%, Anna? No. That 5% can go down. That 5% can go up. You have no control of that interest rate when that money sits in a traditional bank. You have no control over the 5%. So if we wanted to get control over the interest rate, we might change where our savings goes and put it into a whole life policy, where in a whole life policy, we know that we're going to get a guaranteed interest rate. And that interest rate by the carriers we use is 2 to 3.5%, guaranteed for the rest of your life. On top of that, the insurance companies we work with, they are all mutually owned, dividend-paying life insurance companies. Therefore, we get a dividend every year, and they've paid dividends every single year since their existence, well over 100 years. So if we take the guaranteed interest rate of between 2 to 3.5 plus the dividend, most of these insurance companies are paying us north of 5%, which is better than what a bank will. But the nice thing about this interest rate is a large portion of it is guaranteed for the rest of your life. But that doesn't answer how you make a spread. Remember I said earlier, if you're going to take back the banking functions in your life, you got to think like a bank. Well, when you go to a bank, what do you get? You get a loan. So when you go to your bank, which your bank is a whole life insurance policy designed and engineered a special way so it works best for this, and that special way allows you to take money out immediately in the first 30 days. So when you take money, you're going to take a loan. Now let's just do some simple math. Let's say you got $10,000 in your specially designed whole life policy, and you take a loan for $9,000 of that 10,000, because you can never take all of it. Okay, usually it's about 90 to 92%, give or take. Say you take 9,000 out, and you use that 9,000 to pay off your credit cards. Okay, we're just going to pay the credit cards off. The insurance company is going to charge you interest on that money. We'll call that 5% simple interest. Okay, 5% simple interest. So if you're making more than 5, so let me round this up, 5.5, just okay, because it's actually, most of them are more than that. If you're making 5.5 and you're paying 5, and are you making a spread? You are, right? You're making a spread. So now I just found a way to make a spread on my money, because if I start with 10 and I take 9,000 out as a loan, how much money is left in my policy if we design it for you? 10,000, right? We started with 10, we took 9 out. How is it that we have 10,000? Well, the 9,000 we took was part of our death benefit given to us in the form of a loan by the insurance company. So the insurance company literally advanced part of our death benefit from their general account, charged us, right now it's a little under 5%, charged us 5% on that loan. And then our money never needed to leave our account where it's earning compounding interest. So all our money does is collateralizes the loan. See how smart that is from an insurance company? But because of the way that that works, my money's able to compound and they're just going to charge me simple interest. I get to make a spread, but the best part about the spread is every year it goes up. So I just did a training, I think it was last week, and I did a YouTube video on this where I took one of my old whole life policies from New York Life, not even designed and engineered for this, and it was in its 9th year. And if I'm not mistaken, someone correct me, in my 9th year, my cash on cash return that year was 24%. So 9 years into my whole life policy, I was earning 24% that year. So I took the amount that I put in the 9th year, and I took the net gain, net of cost of insurance, net of commissions, net of policy service fees, and I divided that net amount into the amount of premium I put in that year. It was 24%. So now, a second ago, you guys were excited about 5.5 and 5. You were making a spread, but what is my spread now? Isn't it 24 minus 5% in the 9th year? Yeah. So what is that? 19%, right? So see how my 9 years in, that normal old whole life, that year made me 19% after I took the money out in a loan. You see why we use this? So I'm just trying to get you to kind of understand this. But the process of the banking is the reason for this product, the whole life policy, is to be able to make a spread first time. But we also make a spread the second time. Let's say we averaged out your credit cards and you were paying 20% on credit cards. How many of you, let me ask you this, how many of you, if I offered all of you a loan today, a simple interest loan for $20,000, I was going to give you a $20,000 loan at 5%. How many of you would take that loan today? Come on, how many of you would take a $20,000 loan at 5% simple interest? And then what if I said you never need to pay the loan back until the day you die if you don't want to, but you got to pay me interest every single year? How many of you would be even more happy about that? Every one of you. I bet you all 141 of you would say, I would take a loan from Chris Naugle at 5% simple interest, and I don't even have to pay it back until the day that I die. Sign me up all day long. Every one of you said that, but yet some of you don't want to take a loan from your whole life policy when it's the exact same thing. It's a 5% simple interest loan that never needs to be paid back until the day you die, because the day you die, a death benefit is paid out, and that death benefit, and let's just say it was a loan from me to you, and then I just said, okay, all you need to do is get a life insurance policy so that I get my money back the day you die. You'd be psyched about that. It's the same thing. They just subtract that $20,000 from your death benefit. So over here, 20 grand is now the new loan. Okay, so forget about all the numbers. We're just taking 20 grand. So all of you on here just said you would have taken a loan for $20,000 from me at 5%. Now let me just remove Chris's name and add from One America or Lafayette Life or Security Mutual or Penn Mutual or any of the carriers that we use. Would it matter? Would any of you not take that loan for 5% simple interest that you don't have to pay back until the day you die if the loan came from Guardian or Mass Mutual or One America or Lafayette? Would any of you change your tune and say, I don't want it? No, it wouldn't matter. You wouldn't care who the check came from, right? So now what would you, now all of you that said you would take that loan, real quick, I don't want to waste a lot of time, what would you use that $20,000 for? Put it in the chat. What would you use that $20,000 for? Okay, private money club loan. What would you take and use that? Investing? If you're going to say investing, tell me what you're going to invest in. Okay, paying off debt. So as you guys are doing that, I'm just going to stop for a second and I'm just going to pick on Greg, just because he kind of, I'm just taking what I need here. Greg Adkins said pay off debt. Smart, Greg. Let's assume your debt was 20%. Okay, let's say you're going to use the $20,000 loan and you were going to pay off all your debt, which you're paying 20% on. So you no longer owe the credit cards $20,000. You're paying me or the insurance company 5%. So if you were paying the credit cards 20% and it only cost you 5%, what's your spread? Isn't it 15%? So depending on the year of when you have the policy, how many times did you make a spread? Twice, right? You made money twice on the same dollar. because you made a spread over here from the policy to from what the insurance company pays you to what the insurance company charges you. But you made another spread, if you look at it a different way, from what it is you invest in, debt you pay off, car you, whatever, that minus the 5. So the simple rule for being your own bank is never take a loan from your policy unless that money can go work for you at a rate higher than 5%. Fair enough? Simple. But now here's where the train goes off the rails. This is where people screw up. That's why I started with that video. Don't steal from your bank. So many people stop when they take that and they pay off. Like Greg, a lot of people, when they pay their debt off, they stop. They don't do anything. Now, if you had $20,000 in debt, in credit card debt, how much do you think your monthly payment would be? Somebody, how much would a monthly payment be on $20,000 in credit card? Just ballpark. Just give me a number. I don't want to make a number up. You guys had great answers. 500 bucks. Okay. So let's say it's $500 a month. Here's how you take back the banking functions in your life. First thing, we changed where our money went first. We then took a loan from our bank, which was the whole life policy. Why? Well, because the insurance company let us take a loan that never needs to be paid back until the day we die if we don't want to pay it back. Now, we're always going to pay it back, but they let me take a loan that I don't have to pay back. They continue to pay me interest and dividends on all 20 grand I had. Because remember, some of you that took the loan from me for 20,000 at 5%, you have money in a bank. You had 20 grand in the bank. That money in the bank is earning 5%, right? So you got 20 grand in the bank. I give you 20 grand. You pay me interest of 5%. And you do that until the day you die. You take that 20 grand, like Greg, you pay off a credit card that used to cost you $500 a month and 20%. You made money twice. And then you just take the $500 a month that you used to pay on those credit cards, Greg. And what do? You recycle and recapture it. And you pay me back with that money, or you pay the insurance company back with that money. So now, Greg, if I'm charging you simple interest of 5%, and every single month you take the $500 you used to give the credit cards and you pay me back with money that just was kind of almost made out of thin air, money you used to give away every single month, you use that money to pay me back. What is the APR that you're paying me year over year over year? Remember, if you're paying me back my $20,000 every single month, you're paying me $500, so you're paying back $6,000 a year. The first year, the balance now is not 20, it's now 14 after the first year. Now they're charging 5% simple. I'm charging you 5% simple on $14,000. Isn't that less than 5% on 20,000? Yeah. And the next year you do the same thing. You pay another $6,000 on this. Now it's less money that you're paying interest on, right? But you did that by taking back the banking functions in your life. You took a loan from your bank. You applied that loan somewhere where it can earn a rate higher than 5%. You took whatever you used to give away or whatever the investment pays you back. You take that money and you use it to put back into your bank as a loan repayment. Essentially, you're repaying the death benefit to your policy. Now, here's the best part. Nobody likes debts, right? None of you like debt. Why? Well, because they say it's bad, but also because and I'm just picking on Greg here, that $500 a month he used to give to the credit card company, guess what he doesn't have every month? $500. When you become the bank and you take back the banking function in your life, you still make a monthly payment. Greg did not just take that $500 and go blow it at the bar. Greg takes that $500 a month and he pays it back to his policy, his bank, at the same interest rate, the same exact amount every month. But now every single month, does Greg have $500 more, or does he not have $500 more? Does Greg have $500 each month to use if he wants? Yes. Why? Because he became the bank. Because he took back the banking functions in his life. Does everybody understand that, folks? Does everybody comprehend what just happened? I just, in longer than I was hoping, explained the infinite banking concept to you in the simplest form. I showed you how your same dollar can make money twice. I showed you how you can use the insurance company's money till the day you die and only pay simple interest on that money. But if you do what I just said, I showed you how to pay the insurance company less by doing exactly what you do today for somebody else's bank. And I also showed you how to create a legacy without doing anything different than what you're doing today, except for changing one thing, and that's where your money went first, and then adding one step. And that one step is the process. Okay? So everybody's got that. Let's go one more round. You ever feel like you don't have control of your real estate business or your money? That's right. The big banks and the institutions, they're in control, right? I know you felt that before. Private Money Club puts you back in the driver's seat. As members often tell us, it's a total game changer. Join the community of like-minded lenders and borrowers by going to privatemoneyclub.com and sign up. Now, a whole bunch of you in there, when I asked what you would use that $20,000 for, you said lending or investing. So let's just talk about lending first, and investing can be the same thing. What would be let me ask the audience real quick, what would be a good interest rate on your investment? Can someone tell me what a good interest rate would be on your investment? 12 to 15%, 15%, 12 to 15, 12 to 15, 15, 12, 20%, 25, anything is better, 15, 10 to 15. Okay, so I think we can average, we could basically say that a good return would be 10 to 15%, right? So that would be a good return, 10 to 15%. Or I'm sorry, not 10, what am I thinking? 12 to 15%. Great. Where can you earn 12 to 15%? Maybe the stock market, and maybe not. You could also lose 12 to 15. Lending on privatemoneyclub.com? Absolutely. Matter of fact, I guarantee you, if I go to Private Money Club right now, I'll bet you any money, because this is another thing we taught all of you. Let's just do this real quick. Let's go to Private Money Club. I'm just going to log in here real quick. All right, in the public forum. Let's see here. Let's come over here. There we go. First lien opportunity. Whoa, Stephen, you see that? Dwight and Brandon have a first lien opportunity? What are they paying on this? So they got a first lien opportunity that they just put up. Okay. Let's see. So it doesn't say what the interest rate is, because that's what I was looking for. So I'm going to cheat, folks, and I'm going to go into the deals page. And I'm just going to look at whatever deals we have. So I'm going to click dashboard. And there we go. I'm going to go to deals. All I'm trying to see is, can I earn 12 to 15%? Okay, here's 14% on a 6-month loan. Wow, that's good. 20, holy cow. I had not gone on Private Money Club today. I promise you, folks, I'm not making this up. This is not fixed. I just loaned 20 grand to any of you that wanted it at 5%. You could then take that 20%, that 20 grand, you could put it into this deal for 6 months and make 14%. Not too shabby. How much is this one? 2.2. So I don't want to open that. Be the bank. Okay, here's a 15%er. Let's see. I know that these guys paid 12%, because there it is. Let's see. What other ones do we got? I'm just trying to show you that there's lots of, I want to get past White, and there's 15%. Okay, so enough. I don't need to bore you. There's plenty of opportunities to make 12 to 15% in a first lien secured loan with a house, a piece of property as collateral, right? There we go. Eve just said, lent to Dwight Harrison, no issues, being paid back. Awesome. Now, let's repeat that same thing. You change one thing, and that is where your savings goes first. Okay, remember the rule, 10%. That's the minimum. That goes into that specially designed whole life. What are we going to do? We're going to take a loan from that whole life, okay? And we're going to basically send that money to work. Now, let's just use 20 grand again, because that was that one deal, 20,000 bucks. You saved up 25, because you can't take 100% out of your policy, but you can take almost all of it, usually about 90, a little bit more than 90%, okay? It's not that you lose the other amount. It's still in there in your cash value. They just don't let you use it all. Take 20 grand out, you lend it at 12%. Stephen, what's 12% of 20 grand? What is that a year? So we're going to put that in its collateralized, first secured position on this piece of property. So unlike a stock, we have collateral in the form of a piece of property, a residential real estate piece of property that secures your $20,000 loan. And remember,
$2,400 a year.
$2,400? Okay, so we're just going to call that $200 a month. So we're going to take that $200 a month that this borrower pays you, which is 12%. What's 15% work out to be, Stephen? And give me the monthly. That's 12%.
3,000. So 250 a month.
Yep, 250 a month. Okay. So it doesn't matter whether we earn 12 or 15. We're going to take this money and we're going to basically send it back to the policy as a loan repayment. So most people get tripped up here. This is why we never call it a loan repayment. We call it recycle and recapture. But I'm trying to show you that what we're doing, we're taking the 200 a month or the 250 a month. We're just putting it back to the policy as a loan repayment because we want to pay this $20,000 loan down because we don't want to give the insurance company as much in interest. But the other reason is every time we put 200 or 250 bucks a month into the policy, we have 200 or $250 a month. Or sorry, $200 or $250 to use the next day when your check clears. So it doesn't matter. It's like putting it in the bank account. But now when we put it over here, it's better than putting it in the bank account. This is the one thing I never understand, folks. I never understand why people take money from their policy, put it into an investment or a loan like this, and then take the interest from the loan and leave it in somebody else's bank. I'll never understand this. Maybe I'm too far down the rabbit hole. Maybe my thought process has been warped by everything that I teach and I've literally taken this BYOB thing too seriously. Not too seriously, but I've taken back the banking functions and there's no going back for me. I could give you a million reasons why, but I think it's crazy that people do that because all they would need to do is take that money, put it back in the policy, and they have access to the money, but now they're making more money on that than they would in the traditional bank. So why would you ever put money in a traditional bank when you have a bank and you can put the money in your bank and make a better return, have the money be guaranteed, and have access to it the very next day? What's the difference between your bank and their bank? The difference is their bank is in control of your money. You are not. Their bank gets to use your $200 a month and send that money out to work for them, where your bank allows you to take that $200 and send that money back out to work for you. Is this making sense, folks? So I don't care what it is you do with your money or how you do it. All I'm trying to tell you is these are fundamental basics. Let's go on to some other things that we taught this year. In 2023, and this is a little old, the yield curve inverted. And all that means, very simple. You could put your money in a 2-year T-bill, or sorry, 2-year treasury bond, and you'd get paid more interest on that 2-year bond than you would if you bought a 30-year treasury bond. Now, some of you understand that, some of you don't. But let me ask you this. I'll reframe the question. If you put, logically, just thinking, do you think you should be paid a higher interest rate by putting your money out for 2 years or putting your money out for 30 years? Which one should pay you a higher interest rate in the chat? Right. Logically, right? You should be paid more for 30 years because you got to wait 30 years to get your money back. So, of course, you should make more on a 30-year bond or a 30-year loan to the U.S. government than you would make on a 2-year loan to the U.S. government, right? It's just logical. So an inverted yield curve is when you actually get paid more to have a 2-year loan to the U.S. government than you do to have a 30-year loan to the U.S. government. It makes no bloody sense, but it has been inverted. This now makes 8 times, but 8 times in 50 years. And do you know something? Every time the yield curve inverted, it was followed by a recession. There's facts that show that. You should understand that because the yield curve's inverted, it's saying that the long-term prospects of the U.S. government are safer than the short-term prospects. So the economy, by the yield curve, okay, this is just mathematics, it's basically saying that in 2 years, there's more risk than there is 30 years down the line. We don't know what 30 years is. We don't know what's going to happen in 2, but the markets are building in that there's more risk in 2 years than there is in 30 years. What should that mean to you? Beware. It should mean like when you're driving your car in the railroad and you ding, 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 that thing comes down and you should stop your car because there's a train coming, right? And you don't want to get hit by the train. So when that happens, you should also understand that what's coming next is a market cycle called the fear cycle or the panic cycle. And this should also tell you that this should be the cycle that you should get ahead of and try to sell and get out of the markets. There's the buy cycle, the sell cycle, and the panic cycle. Please, Lord, don't let any of you hit the panic cycle. But you got to act if that's not going to happen. You got to make sure that you understand what's coming. And all this, I went in, we taught this is Ray Dalio's debt cycles. productivity, short-term debts, long-terms. I don't want to bore you with this stuff, but it's very important. We taught you how to use your 401k to pay off debts, or use loans from your 401k and do the same thing I just showed you with the whole life, but you put the money back into the 401k. Great strategy. Okay. We taught you how to do that with your HELOCs, which worked better when interest rates were lower. But here's what I was looking for. Okay. So this is the treasury bond. This is the curve, right? This is called the inverse relationship to interest rates. Now, here's all I want you to understand. I have been talking about this all year long. Stephen, can you pull up a chart for TLT? Just pull up a ticker for TLT and show me the max in a second. All year long, we've been telling you that we're probably moving toward a recession. All the signals point that we're going to recession. If you listen to the Fed and you listen to the news, they're saying, oh, we're going to soft land. Everything's going to be fine. The economy is perfect. There's no problems. No problems at all. 2024 is going to be a breeze. We're going to soft land. Yeah, no, who cares about the election that's going to be controversial and difficult? Who cares about Israel and Gaza and what's going on over there? Who cares about what's going on in Russia, Ukraine? None of that stuff matters. None of that's going to mean anything for the U.S. economy. We're going to be fine. That's what the news tells you. Shut the news off and listen to us. I'm telling you, not everything's going to be fine. Okay. And if you knew nothing was going to be fine, and listen, like the cat's out of the bag now. No pun intended with lazy cash here, my kitty cat. The cat's out of the bag. Jerome Powell came on. Was that last Wednesday, Stephen, that happened?
Yes.
Last Wednesday, Jerome Powell came on from the Fed and said that they were leaving the door open to lower interest rates 3 times in 2024. A big warning sign goes off in my head, and it should have went off in yours. It says, oh my God, oh my God, oh my God. The only reason the Fed would drop interest rates is because they fear that the economy is going to be worse off, that they fear the markets are going to be down, that they fear we're going to be in a recession. But that's not what they're going to tell you. They're not going to come out. Jerome Powell walks out, tightens his tie up and says, all right, folks, we're going to inflict a little bit of pain. He did actually say that. And then he says, I think in 2024, we're going to be in a recession. So I think we're going to have to drop interest rates 3 times to combat the weaker economy, the unemployment numbers going up, and a recession. Now, did he say that? Absolutely not. But wouldn't that logically make sense as to why they drop interest rates? Yes, it would. But see, now that the cat's out of the bag, we do know that the Fed is intending on sometime in the near future dropping interest rates. All of you should have rushed to your computer, your laptop, your cell phone, and you should have instantly started buying long-term treasury bonds. How many of you did that? As soon as you watched Jerome Powell last week, like you took the day off of work to watch Jerome Powell, okay? And he came out and he said, we're thinking about possibly dropping interest rates 3 times next year. How many of you rushed to your computer to buy long-term treasury bonds? Is Frank the only one? Anna, you didn't get there late. Terry did it. I was actually kind of joking. I didn't think anyone even watched, Jerome Powell say that, but that's cool. We got a couple of people do that. So those that said that they did, here's what they knew. They knew that the price of treasury bonds are very low. Why? Because the Fed's been raising interest rates. So just look, this is an X. Everybody understands an X. And all I want you to understand is when the Fed raises interest rates, this X here, the price of long-term bonds goes down. Everybody's got that, right? Interest rates up, bond prices down. That's all you need to know. Interest rates up, bonds down, okay? So when the price of an investment is low, what should you do? So when the price of an investment is low, let's say Apple went on sale 50% off today, what would you do? Buy. Sometimes I got to frame things a different way. Everybody's like, oh my God, Apple 50% off, I'm buying it. Great. Treasury bonds go 50% off, buy. So treasury bonds went on sale. Now, the Fed comes out and says the Fed comes out and says, we think there's a chance of decreasing rates 3 times next year. And I think they even said 160 bips, which is 1.6% down. Instantly, what you should understand is that if interest rates go up and the price goes down, what must happen when interest rates go down? Price goes up, right? So if the price goes down when rates go up, well, then the price must go up when interest rates go down if it's an inverse relationship. Exactly. So if interest rates are going to go down, or we're speculating the interest rates are going to go down, what happens to the price? Stephen, pull up the chart. Okay, so I want you to look at this. Forget about charts. Some of you are like, I have no idea what I'm looking at. All I want you to do is see where my cursor is, this really high point. Should you buy or sell when it's there? Should you buy or sell when something, right? Okay, so great when you're looking in hindsight. You should have sold then, but now when you come all the way down here, point to the bottom, Stephen. What should you do when the price is down here? Buy. Okay, good. Buy low, sell high, and don't lose money. So can everybody see, Stephen, shorten the chart, go to 1 year. We'll just do a 1 year chart. Does everybody see what happened? Stephen, can you hold that over like where we started going up over there? All the way to the right. Yep, right about there. What month was that? Does it say? October. Okay, so that's October. Keep going. When did the Fed come out and give that? So here we go. See how it's slowly going up. Go see where it really spikes. Yep, right there. Okay. Last Wednesday, what was the date?
I think it was 2 weeks ago they actually came out with that, which would be in line with this.
Yeah, 13th. So does everybody see what happened on the 13th of December? That's when it was. So it was the 13th of December when they came out and made that announcement. See what happened? See how the price spiked? And see how the price keeps going up? Now go to the full chart, Stephen. Take it back to the full chart. Now, how cool would it be if the Fed dropped interest rates a couple more times in 2024 and the price of your bonds that you bought it, I don't know where they're at now, 99? Yeah, 99.78. What if the price went to 127? Who would be upset? What if it went to 150? Now, you're never going to get out at the top. So right around 150 would be a great time to get out, right? But some of you would hold out and wait for that $170. Okay, great. What's your profit? $50 to $70 a share. Risk-free. You see, this is something else we taught in 2024. But you see, a lot of you listened. Some of you are brand new, so you're hearing this for the first time, and some of you are like, oh my God, I missed it. You didn't miss anything. Oh, this we should have pulled this chart up. See this right here? Bonds may beat the S&P 500 in 2024 as treasuries offer more bang for the buck. You don't say, Business Insider. Who's the business insider in most of your worlds, right? Or would you say it's us? Are we your business insider? Because I think we beat that report. Of course, bonds are going to beat the S&P because the S&P is going down and bonds are going up. That's why. Quite simple. All I did is I just laid out a couple of the simple fundamentals. Now, on the last 3-day Money School Essentials, we did something that we'd never done before. And we showed, here, I want to try to find this. I did a YouTube video on this, and it was basically where we used the policy to buy treasury bonds. But then when we bought the treasury bonds, what we did, I want all of you to copy this real quick, and I want you to save this because this was a first for us, folks. We taught this at the Money School Essentials 3-day virtual training for any of you that were there. And what we did is we went back and we taught. Now, one of the unique things that we did in this training and that video that I just put up on there is we showed you how if you did a portfolio, if you did laddered treasury bonds, and I think we used 5 different treasury bonds, it came out to be about a 5.24% interest rate. That was your yield, okay? That's what they call it, yield. Now, that's going to change because depending on when you buy the bonds, the yield will be different based on the price. Price and yield change, okay? So if the price goes down or goes up, the yield reflects. If the price of the bond goes up, the yield goes down. But if you knew that it was going to pay you 5.24 and you knew you could borrow from the policy at 5%, how many of you would take a loan from the policy to buy treasury bonds? Right? Why? What was the rule, folks? If your loan cost is 5% simple interest, what was the rule? Who can tell me what the rule is that I said earlier? For infinite banking, when does it make sense to take a loan from your policy? I'll give you, no, not so much spread, but it does equal a spread. When there's an opportunity for your money to earn more than the cost of borrowing, right? So if it costs you 5, and you can buy long-term treasury bonds that have the potential for a $50 or $70 upside, risk-free, what's the rule? All we need to do is make sure that the interest, the yield on those bonds covers our cost of borrowing. Because then what are we going to do? Well, if we buy $20,000 worth of bonds, we're going to take this interest rate that the U.S. government pays us. How many of you want to get checks every quarter from the United States government? With no strings attached. I know. You can't get a check from the United States government without a string attached. But if you loan money to the United States government by buying their bonds, you can get paid quarterly from the United States government. It might be one of the only times that you can get a loan or that you can get a check from the United States government without strings attached. But that is it, because you loaned money to them. You take the interest rate that they're paying you and you put it back in the policy with how? A loan repayment. So what did you make? Well, you made two spreads. You made a spread here, which isn't a lot. It's 0.24%, but it's actually more than that, 0.24%. That's right. You made 0.24, but if you took this 5.24% and you kept paying the loan down, your spread goes up. Every time you make a loan repayment by putting that money, okay, into the policy as a loan repayment, your APR goes down, your spread goes up. And then you just sit back and you wait for the Fed to drop interest rates, for the United States to go into a recession, and then the same thing will happen every single time. The Fed will drop interest rates, which will make you a whole bunch of money. You sell the bonds, you pay the loan back for 20 grand. So you got 20 grand back in your policy after you sell the bonds, plus the extra money that they paid you in interest that you got to put back in the policy. And you got a whole bunch of extra money, which is the gain you made on those bonds. You see, we taught that in 2023. First time ever that I'm aware of, and you guys can fact check this, but I think that was the very first time ever that somebody had done a training like that. I don't think it's ever been done, so that's a first. Hold on, I want to hit some of the negatives, because we did get some people that gave me a lot of slack on that. They said, yeah, you didn't account for taxes. Nope, I didn't. So you got to take the taxes out of that interest that the United States government pays you. Oh, darn. Okay, so listen, I think you're all smart enough to know that when you make money, you got to pay taxes on it. The way to beat paying taxes is properly structure where your money goes first. All the money you made on the policy, the interest and the dividends, that's tax-free inside the policy. You could do it from a Roth IRA, which would be tax-free. Okay, so listen, depending on where the money comes from, yes, the bonds are going to pay interest and it's going to be taxable. I didn't account for that. It's literally splitting hairs. And if that's what someone's worried about, there ain't nothing I can teach that person, nothing, because they're missing the whole point and they're focusing on the only negative. And Stephen, what is the lesson that Earl Nightingale talks about? We reap what we sow. So doesn't that mean that if somebody, the only time when they see a training like that, if the only thing they focus on the negativity, what must the universe return to them?
Negativity.
Does everybody understand that? Let me give you an example for those of you that haven't read or listened to The Strangest Secret in the World. He talks about a farmer. Talks about a farmer who plants two seeds. Now, look at my hands. There's two seeds. This hand has a seed of corn. This seed has a seed of nightshade, a deadly poisonous plant. Okay? Two seeds in each hand. The farmer digs two holes and puts the seeds in the holes, covers them up, waters them, tends to the land. Now, I want you to associate the land as your mind. Your mind is the same as the land. What you plant in the ground and what you plant in your mind is what is going to grow. So in one of those holes, nightshade comes out, a deadly plant. Okay, if you eat nightshade, you die. The other one, corn grows. So if in your mind you plant negative thoughts, the only thing that grows in your mind is negativity. And in your mind, if you plant positive thoughts, the only thing that grows is positive thoughts. Your dreams, your goals, your everything you want and everything you dream about, everything you imagine. But that can also be destroyed by negative thinking. So when you let negative thinkers or negative people into your life, they are going to plant their negative seeds in your mind. Think about this. I want you to think about like all the people you hang out with. Are they positive or negative? Do they support you, or do they tell you that your ideas are shit? Then I want you to think that every night, those friends, those people in your life, usually closest family members, every night when you fall asleep, they take a syringe, okay, with a deadly virus, and they put it into your brain and they plant it in your brain. What eventually happens when that deadly disease takes over your brain? It kills you. That's what hanging around negative people is like. Not really, but I just want you to kind of plant the worst possible outcome in your mind. Because when you think negative, when you say I can't, when you say it's impossible, you are planting negative thoughts in your mind. And your mind, like the ground, like the soil, doesn't know the difference. It will give you what you put in. You reap what you sow. So that's something that I'm going to give you toward the end of 2023 as your final lesson for 2023. You got to plant positive thoughts in your mind. You got to hang around positive people in your life. And if you don't, just understand that your mind, like land, will deliver exactly what you put in. So when I asked you earlier in today's training, how many of you want $50,000 a month? And everybody said they did, but a couple of people said that's impossible. There's no way. I'm too old, this or that. If you plant the idea that you're too old or that this will never happen, it never will. That is the only thing that can materialize. But if in your mind you say, I'm gonna earn $50,000 a month, I'm gonna do it. There's nothing else that can change that. I'm gonna make $50,000 a month. What must happen if that's what you thought about every single day? You must make $50,000 because you reap what you sow. All we do here at Money School, BYOB, and the Money Multiplier, and Private Money Club for that matter, is teach you simple strategies on how to change your financial future by planting positive thoughts, by planting positive ideas in your mind. If you take those ideas and you do plant them in your mind, well, the outcomes are not what I'm going to tell you they are. Just ask the audience. Lives get changed, folks. And one of the other most important things that I've learned, and I said it earlier, is give your best stuff away for free. We give our best stuff away for free all the time. People would charge you to teach you what I just showed you about treasury bonds. A financial advisor would probably charge you to invest your money in treasury bonds when I didn't. I just told you, go in your brokerage account and find a long-term treasury bond. I mean, the one I buy is TLT. I'm not making a recommendation or investment advice or giving you a suggestion. I'm just telling you that's one that I buy. That's why I use it as examples. Okay, you can go buy that without an advisor. You can just open a Schwab, a TD Ameritrade, an E-Trade account. I don't care what account you open. We don't want anything from you. We just want you to change your financial future. Stephen, what are some other things that we taught this year?
We talked a lot about, real estate. I saw a lot of people, over in the comment box talking about Private Money Club. They did their first loans. I mean, if I just read down through here, Frank said he purchased TLT a month ago, is doing well. Anna said she changed her mindset on money, and that's changed a lot for her. Susan also, different mindset completely about money. Chelsea said, all my new passive income streams, thanks to private money lending. Chris said, different mindset about money, have embraced IBC banking since April of 2021. Sonia said she has 6 policies, is self-directing her retirement money and doing a lot of money lending in PMC. Tony said, first policy is being funded with Lafayette today so that I can soon begin using what has been taught and learned. Eve said, before learning from this group, I never had a life insurance policy that will be guaranteed win. Now my household has 5. Terry said, own my own debt. Never did that before. Turn a lot of my debt into assets. Tess said, I'm sure I'm not going to remember it all, but 1, self-directing retirement funds, 2 HELOC and invest, 3, study notes, 4, studied 10/10 trading, 5, attended every experience in Money Tank. She's still forgetting stuff. Chris said, I've also joined PMC recently as well. So a lot of people taking action on stuff.
So folks, I want to just hit a couple other things. I know we're down to like the last 10 minutes and I got a couple more things I want to hit, but I just want to point out a few things. When you have a bad day, I want you to try something. Okay. I just want you to try this as an experiment. Go out there and try to find somebody that you can make a difference in. Now that takes work. You got to be out in the field, but like I read a story today. It was about, it was interesting. It was on Facebook, and let me just kind of plant the seed for you on this one. It was about a father and his daughter waiting in line to go to the circus. They were both really excited, and they were second in line. The family in front of them, there were 4 children, okay? Each of the children were holding hands, and the husband and wife were holding hands. The children had kind of old, worn out clothes, but they were neat and clean. And, the woman who's selling the circus tickets said, how may I help you? He said, I'd like 4 children's tickets and 2 adult tickets. And the lady says back to him, the price, it's going to be $20. The husband lets go of the wife's hand, and you see him lean into the lady and says, I'm sorry, how much was that going to be again? And the wife's head drops, and she tells him again how much it's going to be. Now, you all can kind of guess what happened in that, right? The man didn't have enough money to buy the tickets for him and his family to go to the circus. The man with his daughter behind him oversees this and hears this. From his pocket, he takes $20 out of his pocket and he drops it on the ground. And he says, he reaches down and picks it up and he says, sir, I think you dropped this. It must have fallen out of your pocket. The man with the 4 children grabs the money with both his hands, okay, holds his hand and says, thank you so much. I really appreciate this. You don't even know. Takes the $20, buys the tickets for him and his children. The man that gave the $20, what you have to understand is him and his daughter left. They got in their car and they went home because that $20 that he dropped so that they could go to that circus was the $20 that he had, because they weren't wealthy, that he had to buy tickets. Now, I want you to think about this. Do you think his daughter was upset? She witnessed this entire thing. She watched her dad drop the $20. She watched what happened with the family in front. She understood the feeling of that father, not having enough money to take his family to the circus, which that might have been the first time that family had ever gone to see the circus, when it wasn't their first time. So in the car, do you think his daughter was upset that they didn't get to go to the circus? No. The story actually goes on to say that lesson, what she saw her father do, was the single greatest lesson she ever learned from her father. So when you're having a rough day, I know we teach you a lot of good stuff. This is something I can't teach you. This is just something you got to do. Go out there and give. Do it often. Give hugs sometimes. Find somebody that's having a rough day and just offer them a hug. Just go up and hug somebody. I mean, I know it might be weird. I wouldn't do that to a stranger. Here's what I don't know. You never know when this opportunity is going to come up. But you got to seize the moment. Carpe diem. I was at the gas station one time pumping gas. I watched, you're just pumping gas and my truck takes a lot of fuel. So I'm there for a while. I watch a man walk across the street. He was in really shamble clothing, all ripped and torn. He had a plastic bag in his hand. He walked by and he went over to the garbage can at the convenience store and he took the top off, and I see him start taking cans off. I don't even think. I stop pumping gas. I walk over to him. I just take the money out of my wallet. I literally take my wallet out. I take the money out and I say, here you go, sir. And I walk away. So did I care what he did with that money? No. Do I care that if he took that money and went and bought crack or meth with it? No. You see, I think too many of us overthink giving. We only want to give when it's perfect conditions. We only want to give when we know the money's going to go to a good cause. Some people will actually go on and Google best companies to donate money to, because we want to make sure that the most amount of that money is going to go to the recipients. Now, the March of Dimes, for every dollar you give to the March of Dimes, 10 cents goes to the people that should get that money. The rest is all absorbed in marketing and salaries to their staff and their CEO. Salvation Army, it's maybe about 90 cents of every dollar goes to the recipients. Now, because I said that, does that mean you shouldn't give to March of Dimes? Absolutely not. You should give as much as you can to March of Dimes and all of them. It's not your job. The universal law does not state that you should only give when the conditions are perfect. You should only give when you know that money is going to make it to the right cause. No, it just says give. See the difference? Stop overthinking giving. Stop thinking that you got to go out and do miraculous things. Stop thinking you got to give a lot of money. Hell, do you know how I give the most? I give a lot of money. Okay, I do, but here's how I give. See this? This is my YouTube channel, folks. My YouTube channel. How many videos have I created? 1,000. How much time does it take me and my team to create 1,000 videos? I don't know. Am I counting? Am I keeping track of it? Not at all. I just keep creating and creating. And some people are like, how do you come up with new ideas? I don't know. I don't know. We just do. We come up with all sorts of ideas. Some of the ideas that we come up with, maybe it's just a spin on something we've already done. Folks, this is how I give. And you know what a negative person would do? Do you know what a negative person would think? You don't put videos up on YouTube just to do it. You do it because YouTube pays you. Yes, YouTube this month will have paid me $7,400. But do you think that's why I created these videos? Absolutely not. Matter of fact, let me go back to the beginning. Okay, which could take a little bit. 1,000 videos a long ways, but let's just keep going. All right, so back down, and I'm not going to get all the way there, but about a year ago, and I don't know the exact number, but about a year ago, or even here, let me just keep going. I sorry, burning time, but this is important because actually this is more of a personal thing. I want to get to the bottom. Kind of like, how deep is this lake? I want to get down to the bottom. A year ago, okay, a year ago, how long have I been doing this for? It's a good question. How many times have I talked about the dude? How many times have I talked about IBC? How many times have I gone on and done this? There we go. We're 2 years ago. Look at that little lazy cash. 2 years ago, I was talking about getting all the money back for all the cars you're ever going to buy, drive, and own. There's Mr. Garrett Gunderson. So for 2 years, Dave Ramsey being wrong, funding your own retirement. All right, I'm going to stop right here. I went back 2 years. Look at, you see how everything's changed? Let's see how I looked. My debt eraser map.
Cancer is a long journey. It's overwhelming.
All right.
We do for all of our money multiplier members.
All I want to do is stop right there. So you're all looking, you've been watching me this entire time. My studio looks better, right? The quality of the camera looks way better. Like, I even look a little older now than I used to. So this was over 2 years ago that I put this video out. How many comments did I get on it? 1 comment. Do you realize 2 years ago, I had like 100 subscribers? How much money did I get paid 2 years ago by YouTube? 0. How much did I get paid by YouTube a year into it? Pretty close to 0. So it's only been recently that YouTube has actually started paying me a check. So what I'm trying to tell you folks is that for a period of almost 2 years, I gave and gave and gave and gave some more. And I gave my best that I had at that time, and I just kept giving. What must happen when you give? The universe has to return something to you. Not at the exact same time, not at the exact same denomination. There's no, I don't know that. I don't care about that. But when you give, it has to come back to you. I don't understand it. I don't, someday when I am at the gate, you know, looking into the light, looking at God, I will ask that question. But it doesn't matter. As long as you subscribe to that one law, nothing else can happen besides you get. And I tell my team this all the time, and I'm telling all of you this as we get to the end of the year. If all you do in 2024 is put your best foot forward, think positively day in and day out, write down your goals and look at them every single day and repeat them to yourself, read them to yourself every single day. And if on top of that, all you do is you just give in small ways, however you want. You don't need to create YouTube videos. You don't need to do any social media posts. Just give. Just tell people how nice they look. Tell people I like your hair. Tell people, you know, positive things. Hey, I hope you have a great day. Just do that every day. Just keep giving and giving and giving. And when you feel the right moment, then give money. When you got extra money in your pocket, give money. When you take bottles back to those bottle return places and you get a 5 and 2 ones, give the 2 ones. Just keep giving. Nothing else can happen other than you will receive. And here's the thing that's funny. The more you give, the more you get. The more you give, the more you get. The more videos I put out, the more time me and Steven spend, the more money we make. Listen, too many people judge success by the amount of money somebody has. That isn't success. You can't make money until you are, when you are successful, money follows, folks. In that Strangest Secret in the World, there's a really good, and I'll leave you with this because I know we're over time. There's a really interesting one that talks about a man sitting at a stove, okay? He's sitting at we'll call it a fireplace. It's a better picture. Sitting at a fireplace, and he's saying to the fireplace, "Give me heat." And he keeps chanting that to the fireplace, "Give me heat." And he sits there for days expecting heat. He didn't put logs in the fireplace. He didn't put fuel in the fireplace. So how can he get heat? This is how people react when it comes to money. They're like, give me, give me, give me, but they don't want to put the fuel in that's required to get wealth. There's no simple path, folks. There's no get rich quick. The people you see in your neighborhood, in your community that are successful, take the time to learn why they're successful. Chances are it's because they give. Chances are because they thought about their dreams and goals over and over. They created their businesses. They created their ideas. They created from imagination like we used to when we were children. They created, which is why they're successful. Do you know what the number one killer of success is? Who can tell me what the number one way, what is the fastest way to not be successful? Who can tell me what that is? And we're going to end on that. Doing nothing? No. The number one way to not be successful. Number one way. Every one of your answers are right, but I'm looking for something specific. There we go. Stuart nailed it. Conformity. I'm going to try to be nice in how I say this. As you go into 2024, as you start thinking about what's going to transpire and what's going to happen and all the shit that's going to hit the fan when it comes to this election and these wars and everything else, I want you to remember deeply today, and I want you to remember this all year, that if you conform, you will not succeed. But if you create, nothing else can happen besides you will become successful. Conformity is the number one reason people will not be successful. Think about the last couple of years. What were so many people required to do? What were so many people forced to do because of their job, their occupation? They were forced to conform. Now, I'm not going to get into specifics. You all know what I'm talking about. You are going to be challenged in 2024. You are going to be asked to conform to somebody else's ideas, somebody else's dream, somebody else's failed thinking, somebody else's negative thinking. You will be challenged to conform. And I want you to rise above every single time that you're challenged to conform. And I want you to create your perfect idea, your perfect thought, your perfect day. Just create something. Never conform. Never listen to other people tell you you can't. Never listen to other people tell you your ideas are stupid, because they are getting you to conform to their failed reality. That is a fact. Thank you all so much for joining us for this wealth webinar. Thank you for joining us for 2023 and what was a great year. And I will end on this very same thing that me and Stephen chant all the time. The worse it gets out there, the better it gets in here. Thanks for joining us for this episode. We'll see all of you in 2024. All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.